It's about that time of day again, folks. 7:30 a.m. Eastern Time, Monday through Friday. We're doing our crude oil morning prep. We're going from the screen to the floor this morning. My name is Joseph James. I'm here in Los Angeles. I run a live trade room every morning at 8 a.m. Eastern Time, and I'm going to be providing you with a technical approach to looking at crude oil futures this morning. That's right. I'll be looking at charts today with a top-down approach, starting with a weekly chart because it's the end of the week. We'll look at a weekly chart, a daily, an hourly, and we'll boil it all the way down to analyzing the overnight session. And we're going to try to anticipate those high percentage trades starting at 8 a.m. Eastern Time. So take out the pen and paper, take out the notepad. I'm going to post all of my charts on the blog this morning. So not to worry, when you go over to the Sideways Markets blog, you're going to see there's going to be a page on there called Crude Oil Squawk and Prep. Head over there, and this is where I've got all of our charts will be posted each morning once we're done. So you guys can always log back in there and get the information there. Alrighty, now once I'm done with you, we're going to head over across the country from Los Angeles all the way over to the NYMEX exchange in New York City. We got Marty Errico. He's from Traders Audio. Marty has a live broadcast every morning starting at 8:50 a.m. on Traders Audio, right from the NYMEX exchange, and he'll be looking at what the pit is telling him. We'll be getting some great pit analysis from Marty here once I'm done looking at charts. This is going to be a very unique way of preparing for your day. We'll start with the screens, and we'll finish on the floor. Let's get started. First things first, it's the beginning of the week. It's the end of the week. That means we're going to start with weekly charts. Always an important time of the week here, beginning of the week, end of the week. Here we are now. Can't believe this week already flew by. As we were talking about pretty much all week this week, we were bullish in the long term all week because we bounced off that 91.96. And you can see this weekly chart, we're starting to get really narrow here. And boy, wouldn't it make a lot of sense for some lower volume, summertime price action to break out here and make a big run either up or down? Boy, I could easily see that happening very soon. One thing we can see right away here is this wedge, and this wedge is getting narrow. Now, that tells me that we're probably going to get a breakout here in the next few weeks. That's most likely going to happen. But the reality is where are we right now? We are testing the 95.83. We are testing the top of this wedge. We still have room to push, though. It's important that we understand this weekly chart, although it looks like it is close, it is not anywhere near. We still have at least another $0.50, right, to move here before we're going to run into that sell zone at 95.83. Keep in mind that 95.83. Keep that in the back of your minds here. The weekly chart tells me we've got room to push higher, but that we have to be aware we are going to run into supply at 95.83. We're going to see resistance. We're going to see sellers. We're going to see supply into the market at 95.83. That means when we hit that 95.83, now the short-term buying opportunities are higher risk, and the selling opportunities become higher percentage. We will have the opportunity to be buying on the way up, but as you can see, being at the top of this range, that too will be a challenge. All week we've noticed short-term selling and long-term buying. Let's see if that continues as we go lower here, faster time frame to a daily chart. So my weekly chart tells me 95.83. That's the level I got to be watching for. Now the daily chart, well, it blows that number pretty much out of the water. We have another sell zone here in the daily chart. And again, as you recall from earlier this week, if you've been with me this week, we've been talking about how easy it was to use this daily chart to predict or anticipate that price will bounce. It bounced off that trigger zone, and now it will head all the way to 95.25. It's amazing how these markets will do what they want to do. We had no idea based on fundamentals or intraday price action this would happen, but the daily chart gave us enough information that we were able to put together that buying. We pretty much were buying in the long term all week this week. We test the trigger zone at 91.97, right? That was beginning of the week. Now here we've been rising off of that trigger zone, and now we run right into that 95.25. Key numbers here today, 95.25, 95.92. Now that 95.92, what was the level off the weekly? 95.83. So 95.83 was the number off the weekly. 95.92 is the high, right? That's the swing high. So now we have a range of 95.92 to 95.83. We know that's the sweet spot here for your shorts. As you can see, we've already run right into that 95.25. So we are at resistance right now, which means as of right now, the buying opportunities are going to be more challenging. As of right now, the selling opportunities, which we'll have to be patient for most likely, are going to be the easiest trades here as we sit at these highs. Now, if we were down at the lows this morning, I would say no, the selling opportunities are higher risk and the buying opportunities are higher percentage. Right? See where I'm going with this? Okay, so keep an eye on that 95.25. And remember, we got that 95.92. So now the range is 95.92 to 95.25. We pretty much have to look for selling opportunities until we get above that 96 even. We get above the 96 even, then we can start looking closely at getting into longs. 96 even is where we'll start to look to buy here. All right, the weekly chart gave us some clues. The daily chart gave us some clues. Let's keep drilling down. Here's a 4-hour chart. My 4-hour chart gives me even more information. Here's that 95.09, and the 4-hour chart, the 240-minute chart, is a great balance between a daily chart and an hourly chart. It's smack right dab right in the middle. Now, couple clues on this. First big clue, this old bear channel. Easy to see, we've got the old bear channel. Now, we use Fibonacci to qualify all of our price structures. We call them advanced price structures. In other words, some channels are not created equal. Did you know that I can actually use Fibonacci to calculate the A, B, C, and D? I now have a reversal zone at 96.49. Now, if this was any other market than crude oil, maybe gold, right? I would say there's no way we're going to get all the way up there on a Friday. Not so fast. Oh, how much we love you volatile crude oil market, right? Crude oil will push as far as it wants to go. We've seen crude make $3, $4, $5 moves, haven't we? So getting $1 higher, $1.50 higher should not be a problem for this market. So even though the S&P, the euro, the bonds, right, most of the E-minis we wouldn't think could get up there, we definitely know that this crude oil can easily jump up 96.50 and then pull right on down. I'm going to be keeping that number on my radar this morning, 96.50 area, 96.50. Now, you know the way we do it, right? We're not putting a limit order to sell at 96.50. Okay, we're not going to jump in front of a freight train. What we'll do is we'll wait for it to consolidate. Once it starts to reverse, then we're selling retracements because we know we've got those buyers beat. So the bear channel gives me a reversal zone overhead starting at 96.50. That's the first clue. The second clue, look at this price wedge. The price wedge is a huge clue because what do we always talk about with wedges? Well, yes, it's my favorite structure. Yes, it's the one I would trade for the rest of my career if I could. And absolutely, a price wedge tells us personality. Okay, a price wedge tells us personality. What personality? Lower highs, higher lows, right? That tells me indecision, inconsistency, lack of confidence to one direction or the other. What normally happens with a price wedge is that we will jump either up or down. In this case, it's a bear wedge, which is perfect. And then we're going to use these swings that created the wedge, right? We're going to use these swings as reversal levels. So if I break out of a wedge to the upside, I'll look to sell it, right? Now, we always want to sell the highs of a wedge. We always want to buy the lows of a wedge. But if for some reason those buyers push through it, we will then look for reversal levels, right? Again, use the swing levels above it. So at any moment here, we know that these levels can act as a wonderful look for a price reversal and a selling opportunity. So use all of these 95.09, 96 even, 96.08, right? We can see these levels easy to find. Our indicator package plots all of it for me automatically, as you can see. And so it's easy to see where we'll be looking for price reversals as price goes higher. This 4-hour chart really makes buying look very, very difficult, doesn't it? Now, you know how it always goes. We might be trending today. If we are trending this morning, then this blows us out of the water. We've got non-farm payrolls in 45 minutes at 8:30 a.m. this morning. Remember, guys, those non-farm payroll numbers is the biggest report we see. It's the biggest report we get as traders. If those numbers are bullish, crude oil can easily make me look like a fool and just keep on going higher. So I do have to remember that with all of this technical analysis, crude oil is a very emotion-based market. The market personality will react to today's news, and I'm going to have to be reacting to that. So I will be adjusting my strategy if we start to see this news come out this morning and the price action just takes off to the upside. The 4-hour chart tells me to be careful about buying and be patient for that selling opportunity, possibly later on this morning. Now let's move to a much more useful time frame for an intraday trader, and that will be a 60-minute chart. And the 60-minute chart shows us what we almost don't want to see right now, right? This is a little bit conflicting to what we see on the 4-hour. Now, the 4-hour chart showed us a bear channel, but you can see on the 4-hour chart that we definitely see signs of a short-term bullish channel going higher, right? So we can definitely tell that that's going to be easy to find on a faster time frame. So now we go down to a 60-minute chart, and the 60-minute chart gives us exactly that. There's that bullish channel. There's that short-term range. Now, here's the plan, guys. Here is the plan. The 4-hour chart told us, the weekly chart told us, the daily chart told us. Buying is going to be difficult. Now, the 60-minute chart is telling us we have a short-term bull channel. Now, remember, the short-term trend is the most important thing for an intraday trader. Don't get wrapped up in paying attention to the daily or weekly trend, right? We can easily see inside of a long-term downtrend, we can easily see a short-term uptrend before it heads back lower again. So we need to, as intraday traders, right, swing traders, this does not apply to you. If you're trading intraday, if you're trading day session only, if I'm flat when I go home at night, that means I'm looking at the short-term trend. The short-term trend right now is moving higher. What am I going to do to make money with this? I already know that buying is going to be more challenging. So I have to wait to buy the lows of this channel to get the highest percentage trade. This is so important today, guys. Yesterday was a great example of that. If you were trying to buy yesterday morning, you got your head taken off. But sure enough, price kept jumping up and giving you a nice short. Jumping up, giving you a nice short. We are going to continue that process again this morning, most likely. Again, non-farm payrolls can change everything I'm saying right now in a matter of seconds. If it comes out bullish or bearish, we may have a new short-term trend. But as I'm seeing right now, the path of least resistance is to buy the lows of this 60-minute channel. I'm looking at 94.76. I'm looking at 94.50. This area right here is going to make for an excellent place to buy. That's the 94.76 to 94.50 area. Another thing we just talked about with that price wedge applies to a channel. Look at the 94.15. If we happen to get a bearish report come out, we may break right through that. I will be looking to buy here with a reversal. So as the price moves lower, I'm buying the lows of the channel. I'm buying the range of swings here. I'm buying the 94.15, right? And so on and so forth. I'm staying patient to buy at that support level, to buy at the buy zones that are located below me. Now, one more time frame, the VIP. This is going to give me the most important price levels I'm going to use today, and I will make sure this chart is posted for you guys and gals so you can use it. What do we see here? First of all, we can tell the London trading session, right? The overnight trading session is a relatively narrow session. What this tells me is that we have potential here to be either two-sided or to break out. I will begin selling at, well, you can see here we've already hit the previous high of day. That's yesterday's high of day. That will be the first opportunity to sell short. The second opportunity to sell short will come at 95.50. We will be looking for a reversal inside of this reversal zone. We got that yesterday morning. That was an easy sell for us yesterday. As we keep going higher, I have a huge target for buyers up top at 95.75. If you followed my guidance yesterday, you got that nice short yesterday off that reversal zone. Remember that from yesterday, guys? Yep, absolutely. This was yesterday's high. That 95.32, remember that? That was yesterday's reversal zone we called at 7:30 in the morning. This morning, again, pending non-farm payroll report, doesn't blow this thing out of the water, we know that we have a reversal zone now at 95.75. 95.75 is going to be where I will definitely be looking for price to consolidate. I will take profit on my long positions, and I will look for the short, right, to come. Now, please be aware, we noticed this trend line. This trend line has been holding here. Now, assuming this trend line continues, we will have to trade around this trend line. And remember, guys, these trend lines are not thin lines. They are intended to be thick, blurry levels of support. So I've got to remember that we may see some wedging here if we get stuck between this trend line. Okay, so keep that in mind. That all has to do with when we test that level. As price goes higher, I'm selling the reversal zone short. I can get long above 95.50, but we talked about the riskiness of that today. As we go higher, I'm going to be selling the 95.70, 95.75. That's another reversal zone. And of course, last but not least, we have the prior week's high, another reversal zone here at 95.92. Keep an eye on this 96 even area, 95.92 to 96 even. This will be another location to look for reversal. Now, you might be thinking to yourself right now, Joe, all these reversal zones, how do I know which one to choose? The market will tell you. Remember what happened yesterday? Yesterday morning, it blew right through the reversal zone, went up to the next one, and then it collapsed. If you just tried to predict, you got your head taken off. We never predict, we react. I'm anticipating a reversal to happen around 95.75. I'm anticipating a reversal to happen around 95.92. I'm anticipating reversals, but I can't guarantee anything. Now, if you're short with me this morning off the previous high of day, I have a target at 95.05, 94.98, 94.88. These are going to be easy profit targets on the way down. Take half your position off at the first one, take the other half off the second, and you're good to go. Right? Half off here, half off there. As we go down to the lows, I will be looking to buy these lows. Now remember, we are looking for short-term selling opportunities, but we do have a feeling this market has some legs to keep going higher. As we go lower, 94.76, 94.60, 94.40. I also have the daily buy zone down here. I also have a bull channel low. This is the hot spot right here. This is the hot spot. I've got the reversal zone. I've got the daily buy zone. I've got the lows of that bull channel. Clearly, I'm taking bits and pieces out of my short trade at these support levels on the way down. But as we go lower, I'm looking to bounce in this reversal zone, and this is going to be possibly your home run trade today. Like we said earlier, buying the lows of that bull channel. I'm selling as we go higher. I am buying as we go lower. Guys, that's what I'm seeing here on these charts. I'm here in Los Angeles. All I've got is a bunch of charts in front of me. Now, how about Marty? Marty's on the NYMEX exchange right now, and Marty's got his feet on the ground at the NYMEX. Marty, are you seeing these short-term selling, long-term buying opportunities here this morning? What are you seeing on your end?
Good morning, JJ. Yes, I am indeed. I'm looking at exactly what you're talking about, that 94.75, that 94.74 level. Big time, daily pivot today, big time buying opportunity down there at 94.74, right? Then above, we have that high of yesterday, 95.32. That's going to be, well, 95.25 really is going to be a very, very, very important level. I'll get to those in just a minute. It's going to be very, very important level of resistance above, along with a lot of sell stops. I know filling brokers are in the pit, and they have sell stops up at 96 even, and that high up at 95, 92, 96 even, that reversal zone that you're talking about. Brokers do have selling stops. Filling brokers, they have selling stops there. All right, well, this morning, ladies and gentlemen, what we're looking at is yesterday's range in crude, about $1.17. Again, it was a little bit of a firm day to the upside, and our opening print yesterday was our low print, so we did see activity to the upside all day yesterday. Now, finally, we see crude break above 95 even, and we are starting to feel a little bit of a bullish sentiment coming in. But unfortunately, we didn't close and settle above 95 even. So we have to really kind of play what the market gives us. So I wouldn't give the won't give the benefit of the doubt to the bulls right away because we didn't close and settle above 95 even. But we will definitely keep on looking for this weaker dollar, stronger crude type of deal. Again, dollar DXY was down over 500 points yesterday. Big move to the downside. Did cause crude to catch a bit of a bid. You can see now this morning, early morning, crude is actually trading right now up above 95 even, which is promising if we can get an opening print above 95 even, right? But we're looking for it to come down to that reversal zone, come down to the daily pivot at 94.75, 94.74 to be exact, 94.74 and buy. So as I mentioned, this dollar still continuing to trade lower today, which is great. We're starting to see volatility and also spreads. They were coming in like yesterday. If you look at the chart with me, we're going to see spreads both in significantly here today. We're looking at implied volatility just about like 23% or so. It went down to 22% yesterday. The spreads were all rather tight and in contango right now. I'm looking at the spreads pretty much sideways at the moment. Again, spreads are pretty much mid-range to slightly bullish. We have to keep in mind that there is going to be some nice support here after our non-farm payrolls, right? We're going to make some new levels of support as soon as these non-farm payrolls are released. Now, the street, everybody, all the traders down here, we're looking for 165,000. That's the number up here on the board. Again, 165,000. So say we get some type of bullish 200,000 type of number here, right? 200,000. We can look for crude to probably just pull back just a bit, right? And then look for that, 94.74 level. Look for these levels that are going to reverse. So again, we could get a bit of a pullback if we do get that 200,000. Say we get a bearish number like 130,000 or so. That could give us a little bit of a buying opportunity as well. We can retrace and then we can have a nice buying opportunity. So, all right, guys, let's just here talk about a couple fundamental changes, and we'll talk about what happened in the pit, right? We're looking at now your crude higher this morning along with RBOB, Brent, and heating oil. Brent back above 104, which is promising for crude to trade above 95 even. We did see RBOB and heating oil are both multiple market versions, all trading in somewhat of a sideways range, but bullish on the morning right now. We need to exceed those highs from yesterday. That's 285.40 in your RBOB. That's 287.45 in your heating oil, and on crude that's going to be 95.32, again the high from the pit session. So we'll get to those levels in just a minute. So as I mentioned, we do see your dollar lower this morning with your euro, cable, Canadian, yen, Aussie, all trading higher. Bonds unchanged pretty much here. LIBOR a little bit lower like the dollar. The spreads this morning here, we've been seeing the Brent WTI spread and somewhat of a mid-range trade at the moment. Like I said, it was kind of mid-range to slightly bullish on the Brent WTI spread. We're around $9 even. Again, that's mid-range to bullish. Calendar spreads this morning, as you can see here, I've marked it up for you here, the calendar spreads. I have your July to August calendar spread a little tight this morning. Again, in contango, that's bullish. I'm looking at your July to SEP contract. It's currently right now just kind of unchanged right now, so we don't have much of an indication. Mid-range trade on the July to SEP. July to OC is bullish, and then the rest of our crack values here are all kind of sideways, just indicating that we can trade in the 95 handle. So we're going to get over to our levels in just a second here. We just want to look over to some fundamental factors besides looking at these supply-demand differentials, the currency differential, the risk-on, risk-off sentiment. So risk-on is one thing, right? We've been seeing some moves here, guys, out of Cushing, Oklahoma. A couple articles that were passed around the trading floor this morning that were quite interesting to read. So Cushing, Oklahoma is starting to show that there's a possible demand coming into play. They're taking crude out of Cushing and they're starting to move it around into other plants. So again, that shows us that there's some demand coming in. There's some tensions in the Mideast that we want to watch out for. That's bullish, and again, that Cushing demand is very bullish as well due to the numbers that we got last week. I mean, you guys, just 2 days ago, you saw those numbers, the inventory numbers, and they were very bullish. So again, we have that demand coming in. They're taking the crude out of Cushing. They're bringing it around. We see also what's happening here in the Mideast, geopolitical tensions, very bullish for crude. And also, Iran, they're having their elections next week, so that's something that we also want to watch too, ahead of these non-farm payrolls. Again, that can make some nice support for this market. So you can see that JJ was talking about in that channel that he had up there. He had that that hourly channel, and you can see we're kind of in the middle of the channel. So again, we don't want to necessarily take any trades in the middle of the channel. You want to wait till we can get to the low of the channel, buy that low of the channel, or you want to sell the high of the channel. Again, I'm looking at a very similar chart. That chart was passed around the trading floor this morning, and a lot of traders are looking at this saying, boy, I'm waiting till this pit session open. That's when I'm going to make my decisions. At 9 o'clock, after a number comes out, I'm going to trade the reaction of a number, basically, and they're going to trade the reaction of whether we breach the highs of this upper extreme or we test the lows of this lower extreme. So these are these levels. All right, guys, let's get to the levels. Let's get to volatility. Let's get to some large trades in the pit yesterday. All righty, guys, let's go to those level sheets. Our high from yesterday, 95.32. Once again, 95.32, your pit session high from yesterday. Again, we'll put up that level sheet in just a second. Low today, 94.15. We end up closing and settling the day at 94.75. Again, 94.75 is going to be a nice level of support as it is our close and settlement number. Again, it's in the middle of a range. And I also want to point out that we had about a 60-cent uptick yesterday, about a $1.17 range. As I mentioned, that opening print was our low print. And we have that 94.75 as our daily, 94.74 as our daily pivot today. Again, 94.74, your daily pivot. Volatility, 22%, ticking up to now 23%. So vol was coming in, now it's starting to kind of firm up just a bit as vol firms. That's always promising here. The volatility index settles the day at 23.90 yesterday. So real quick before we go over our levels of support resistance above below, let's just talk about in the pit yesterday. We saw a couple big trades come in, and we see a very popular trade that locals have been taking for the last couple of days. It's a July Augie fence where they target 95.5, 100, and 102 in the fence. And that simply means that locals are just continuing to come on with this grind where they're selling puts and buying calls in the options pit, and that's very promising to the upside, right? We also see open interest. Shorts are getting squeezed out of open interest. 251,523. This morning I just looked at the board here, and we did change a bit in open interest. I got 241,219. That's 10,000 lower from yesterday and 10,000 lower from the updated level that I have on that sheet. So again, you can see shorts are getting squeezed out just a bit, and everybody's kind of flat before this number, except those locals and those long option positions. So in the pit as well, I saw 7,200 July Augie 100 calls trade, and I saw about only 4,200 88 puts trade for July. So again, they sure up the upside there. They hit that $100 target with some big options. Again, 7,200 of them, 7,200 100 July and Augie calls. And then they sure up the downside by buying some 88 puts. Again, 4,500 of them. Again, I think those are just large locals massaging some risk around, not necessarily hoping to get up to 100 or 88 within the next week or two before expiration. They're just shoring up some risk and massaging some risk around. So levels of resistance above, I got 93.32, 93.33, and 95, 95.33, 95.32, right? I got also up out here 95.92, which is our high, obviously, that we're looking at, where a lot of potential billing brokers have some sell stops at. And then 97.08, last level of resistance above. Support down below, I got 94.16, 93.57, and 92.40. So again, those are our levels of support resistance above below on your crude. Natural gas, guys, whoa, big day yesterday to the downside. We saw a big build in inventories. We had 111 BCF. Big build in inventories. One of the biggest that we've seen this year. And on the 5-year average, we're looking at that being very bearish for natural gas. So again, if we can maintain levels below 280, once again, if we can hold levels below 285, right? And right now I know we're trading above that. We could see bearish prices. Again, expect the fact that we had a huge downtick, 14-cent downtick yesterday. Expect a little bit of a retrace back up to the 50% retrace. As you can see, I did it on my commentary video. I kind of just showed you guys the big retrace. It's 50%. It's 392. So again, if we get above the 85, we open the pit session above 385, I'd be buying back up to about 392. But that's like short-term play to range. Longer-term bearish. If we can stay below 385, we can get down to those 380s. I should give up the chart later, but 380s. We can get up to those down to those 375s and then reverse. Again, we're seeing some levels that we haven't seen in a few months. So Again, natural gas, we have Baker Hughes rig counts today as well, so that's going to be very interesting to see as that could affect natural gas. Pit session high from yesterday, 396.50. Once again, it's 396.50. Low, 382.40. We closed and settled the day right on the low prints at 382.50. Getting at 382.5. So just one tick above lows. Net change yesterday, 14 cents to the downside. Range yesterday, 14 cents. Daily pivot today, 387.10. One thing we saw, volatility. Wow, what a bit in volatility. 38% in the implied volatility, 42.75 in the vol index. So big upside in the volatility. As you know, these locals here in the options, natural gas pit and the outright pit, they're holding volatility. Again, they like that skew on vol where they're holding it, and that's where they're selling calls and buying puts. So that means that the bearish play, and that's what these guys are doing, and with the volatility. All right, guys. Resistance above, I got 391.80, 401.11, and 401.10, sorry, and 415.10. Support down below, I got 377.80, which is going to be that reversal zone, 373.10, and 359.10. Again, keep in mind, guys, big, large trades here, over 5,000, 390 puts trading now here in the pit. Again, I had those large options orders come in. They also put in a short put spread and a short call spread down from the 390 to 385. So again, they take some profit around 385, and now we can watch come back up. Then we do have a little bit of interest in the $4 calls, but just about 1,000 contracts of them here. All right, guys, let's rock and roll. Again, let's take a quick look, ladies and gentlemen, at these levels we just did. And now, guys, we're going to see just about an hour or so here. Again, we do have non-farm payrolls coming on out. I'm going to throw it back over to JJ as I took a little long this morning to look at the clock again. That's it for me, ladies and gentlemen. I'll see you all in just a little bit.
Thanks, Marty. Really appreciate it. Great to hear from you here today on a non-farm payroll Friday, right? Now, don't forget, everybody, these non-farm payroll days are very, very important. Non-farm payrolls are the biggest news events that we get. It's really important that we understand that price action will not be typical this morning. If you've never traded a non-farm payroll Friday, fasten your seatbelt. This will be a busy Friday morning, and just like how busy it starts, it will stop just as quickly. Remember, non-farm payroll Fridays, most traders will be hitting the exits as early as 10 a.m. this morning. So even though we'll be here trading till noontime today on a Friday, we must be aware that time is not on our side on a non-farm payroll Friday. So keep that in mind this morning. We just have one major news event this morning. I have updated our blog with all of today's charts. Head over to Sideways Markets. Click on that link that says Crude Oil Squawk and Prep, and you'll see today's charts. Once again, my name is Joseph James. I'm from School of Trade. That was Marty Errico from Traders Audio. We both thank you for tuning in this week. We'll see you guys in just a few days on Monday morning. We've got another Monday edition of our morning prep, going from the screen to the floor. Thank you so much for coming in today. Remember, guys, you got to learn it so you can earn it. We'll see you guys on Monday morning. Have a great non-farm Friday. Have a great weekend. Enjoy that summertime weekend, and we'll catch you guys on Monday. Adios, amigos. Bye-bye for now.